Welcome to InvestorWeb, your go-to channel for everything finance. Today, we delve into an intriguing topic. Why can't poor people use tax havens? Here at InvestorWeb, we unravel the complexities of the financial world, presenting them in understandable, bite-sized pieces. Our focus today is on tax havens, those elusive financial sanctuaries often associated with the wealthy. We'll explore why these tax havens remain inaccessible to those less fortunate. Stay tuned to learn more about tax havens and the financial barriers they present to those less fortunate. Before we delve into the reasons, it's essential to understand what tax havens are. Tax havens, in the simplest terms, are jurisdictions or countries that offer low or zero tax rates to foreign investors. They are like the secret treasure chests of the financial world, providing a shelter to stash away wealth and reduce tax liabilities. You see, tax havens are not just about low taxes. They often provide secrecy and anonymity, making it almost impossible for authorities in an investor's home country to trace back the money. This lack of transparency is one of their key characteristics. Now, how do they function? Well, imagine you're a multinational company or a wealthy individual. You have earnings that you'd rather not have taxed heavily. What do? You move your money to a tax haven. This could be in the form of setting up shell companies, trusts, or other financial structures. Shell companies, for instance, are businesses that exist only on paper. They don't have employees or offices. They're set up to manage money while concealing the true owners' identities. Trusts, on the other hand, are legal arrangements where a person or organization holds assets for another party's benefit. In tax havens, trusts are often used to provide an extra layer of secrecy and to take advantage of the low tax rates. It's also important to note that tax havens aren't always far-flung tropical islands. Some of the world's largest economies have tax-friendly jurisdictions. Delaware in the United States, for example, is known for its business-friendly laws and low taxes, attracting corporations from around the globe. However, it's not all peachy. There's a significant debate about the role of tax havens in global finance. Critics argue they facilitate tax evasion, money laundering, and other illicit activities. Supporters, meanwhile, believe they encourage economic growth by attracting foreign investment. Now that we have a basic understanding of tax havens, let's explore why they seem out of reach for the less affluent. One of the main reasons why poor people can't use tax havens is the high entry threshold. Now let's delve deeper into this. Imagine you're trying to set up an offshore account or business in a tax haven. The first hurdle you will encounter is the financial requirements. Typically, these jurisdictions need a substantial sum for the initial deposit. We're not talking about a few hundred or even a few $1,000s here. No, the entry threshold often runs into the tens of thousands, and in some cases, hundreds of thousands of dollars. Of course, these numbers might sound reasonable or even attractive to the wealthy, but for the average person or those struggling financially, it's an insurmountable barrier. It's like trying to buy a ticket to a concert where the cheapest seats are priced out of your reach. But that's not the end of the story. Even if you miraculously manage to scrape together enough money for the initial deposit, there are still other costs to consider. You need to pay for the services of a lawyer or a financial advisor to help you navigate the complex legal and financial landscape of tax havens. And trust me, these professionals don't come cheap. Setting up an offshore entity involves a lot of paperwork and legal procedures. You need to register your company, apply for licenses, and comply with local laws and regulations. All these processes cost money. And then there's the ongoing cost of maintaining your offshore entity, including annual fees and administrative costs. All these costs add up, and before you know it, you're looking at a hefty bill. Remember, tax havens are designed to attract the rich and the wealthy who can afford these costs. They're not meant for those with limited financial resources. In conclusion, the high entry threshold is one of the main reasons why tax havens remain an exclusive playground for the rich. The initial costs alone, from the hefty deposit to the legal fees, make tax havens an unrealistic option for those with limited financial resources. The initial costs alone make tax havens an unrealistic option for those with limited financial resources. Apart from the high costs, the complexity of tax havens is another barrier for the poor. Now let's delve into the intricate labyrinth that is the world of tax havens. You see, it's not as simple as just stashing your money away in a far-off land. There are layers of complex procedures and legal requirements involved in setting up and maintaining offshore accounts, all designed to ensure these financial hideaways remain the domain of the wealthy. Firstly, the process of establishing an offshore account requires an understanding of international law and finance, an area where even the most educated among us might falter. Each tax haven operates under its own unique set of laws and regulations, and any misstep or oversight can lead to severe penalties, legal repercussions, or the loss of your hard-earned assets. Secondly, even after you've successfully navigated the initial setup, the journey is far from over. Offshore accounts require ongoing management and regular reporting to ensure compliance with changing laws and regulations. These are not static entities, but dynamic systems that demand constant vigilance and a deep understanding of global economic trends. Now, you might be thinking, why not just hire a financial advisor to handle all this? Well, that's where another layer of complexity comes in. The costs associated with hiring such professionals can be prohibitively high. These experts command premium fees for their services, often in the range of thousands or tens of thousands of dollars a year. Furthermore, finding a trustworthy and competent advisor is a task in itself, requiring a thorough vetting process and a keen understanding of the industry. All these complexities form a formidable barrier, standing between the average person and the world of tax havens. The intricacies of these systems are designed to protect the interests of the wealthy, creating a fortress that few without substantial resources can breach. Without the necessary expertise or resources to hire professionals, navigating tax havens becomes a Herculean task. The reality is, tax havens are not designed for the everyday person, but for those who can afford to pay for the privilege of secrecy and reduced tax liabilities. Lastly, access to information and the right networks is a crucial factor that restricts the use of tax havens by the poor. Knowledge is power, and in the world of finance and tax planning, this couldn't ring more true. The world of tax havens is shrouded in secrecy, and information about these elusive entities is not readily available to the average person. Consider this. How to navigate the intricate maze of tax havens is not typically something you'd find in a personal finance book at your local library, nor is it a topic that comes up in everyday conversation. Instead, this knowledge is often closely guarded, shared within tight-knit circles of financial advisors, lawyers, and accountants who are well versed in the complex world of international finance and tax law. These professionals, who have spent years honing their expertise, are the gatekeepers of this information. They provide their services to high-net-worth individuals and corporations, guiding them through the labyrinth of tax havens. It's a bespoke service tailored to the individual needs and circumstances of each client, and as such, it comes with a hefty price tag. Now let's talk about networks. Relationships are everything in this realm. Knowing the right people in the right places can be the difference between successfully setting up a tax haven and hitting a brick wall. These networks are often built over years, even decades, and fostered in the boardrooms of multinational corporations, at high-profile events, or in the halls of prestigious universities. These connections provide the access and resources necessary to operate within tax havens. They can help navigate local regulations, set up complex structures, and ensure that everything is done within the bounds of the law. But these networks are not easily accessible to the common man. They are the domain of the rich and influential. Without the right information and connections, tax havens remain a distant dream for many. It's a world that's out of reach for the majority, reserved for those who have the means to unlock its secrets. The use of tax havens, therefore, becomes yet another example of the widening gap between the haves and the have-nots. To sum up, the world of tax havens is not as accessible as it may seem. Through our journey today, we've shed light on the intricacies and complexities that make these seeming utopias of wealth preservation a far-off dream for the less affluent. Let's quickly recap. We started off by defining what tax havens are: jurisdictions with low or no tax rates, providing a shelter for individuals and corporations to limit their financial liabilities. Next, we explored the high entry threshold, a significant barrier that prevents the average person from taking advantage of these tax havens. We discussed how the substantial initial capital required, coupled with high ongoing costs, makes this an unattainable strategy for those who aren't already wealthy. We then delved into the complexity of tax havens. The labyrinthine laws and regulations, along with the need for expert legal and financial guidance, adds another layer of exclusion for those without the resources to navigate these waters. Lastly, we highlighted the importance of access to information and network. The privileged few who can exploit tax havens often have insider knowledge and connections. Another reason why this remains out of reach for the common man. Thank you for watching Investor Web. If you found this video informative, please hit the subscribe button for more content like this. Remember, knowledge is power, and every bit of information can help you make better financial decisions. Until next time, keep investing wisely.